This is the Friday, February 20th, 2015 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
Now, during the show, we did not have a chance to talk about the two reports that came out this week. So let's talk first about the cattle on feed.
Okay.
Any big news there?
If I recall, I saw the numbers as I was coming in, that there was either more cattle placed or more cattle on feed than what was actually expected. And this, so often in the past, the argument was the theory was you would always see the cattle trade the report before it was released, and so then afterwards it was free to go back and do whatever it wanted. And we did see the cattle market down on Friday ahead of the report. So maybe there was an anticipation that these numbers could be a little bit larger, that continues on that theory, that idea that we're starting to grow the cattle herd again after years of decline. So, slowly but surely that certainly seems to be the case. It just, first glance at it, it would seem to be a bearish number that could come into play on Monday. But again, we'll see if it hasn't already been factored in.
And what's interesting, talking to producers and folks in the industry, is this growth in the cow herd is coming quicker than most people had anticipated. I think that the expectation was it was maybe another year away, and yet we're seeing it already the past 2 months in a row on these cattle on feed reports.
Yeah, I always thought pushing it back to 2016 was maybe a little bit pie in the sky, maybe more hopeful than anything else, because we've been collapsing the corn market since 2012, and so the collapse in the corn, it was about, once it really started to slide, really was kind of the catalyst that was going to lead towards, eventually lead towards some larger cattle numbers. And so we've had basically a year and a half now, maybe 2 years, not quite 2 years, to really work on this. And so it's not that surprising that we're starting to see, at least from an outsider of the livestock industry looking in, it wasn't all that surprising that we're starting to see those numbers
trickle in already.
Right.
Now, the other report that came out Friday was the cold storage report, and you touched on the port issues on the program. Could that have had a factor in the numbers we saw today?
I think it could. I think when we look at these huge cold storage numbers for both pork and beef, that some of this has to be due to the fact that we just haven't been shipping anything. We haven't been shipping any pork in particular, and our exports are way down. So, is it overly bearish? It's bearish. Has it been run through the market? Just look at what's happened to the hog market anyway. So some of it has to be built in already. It could have some follow through, could have some carryover into next week, but I would be surprised if it's a lot.
And it would be an indication that maybe the resolution of this port issue could be a fairly bullish jump, at least temporarily.
Yeah, there was, and this is bad coming from a newsroom that I don't actually know, but there were rumors of it on Friday that it had come to and that it had been resolved. Now, I have not seen anything that substantiated that whatsoever, so we'll find out over the weekend. But again, as we talked about in the program, there are still technical signals out there that show that the hog market may want to go up, and if so, maybe this feeds into that.
All right. Now, I want to turn to a couple of questions from our followers on social media. And Louise in Healy, Kansas, asked us on Facebook, is it true, is the old saying true, that oil, wheat, and gold markets move together?
The emphasis on that statement has to be on the old, because back in the day, wheat had the moniker, the greatest market of them all, and crude oil came up and was one of the key commodities, and gold's always been the safe haven commodity. So it would make sense then that these three key markets would move together, at least some of the time. Over the last 10 years, wheat's really been pushed aside, probably for wheat, probably the last 20 years. In the last 10 years, corn has dominated. So, the three kings of commodities now are crude oil, corn, and gold. And so I don't know that they necessarily have to move together. We can look at it right now, and they all seem to be struggling a little bit. But I think gold's getting ready to move up again. Crude oil's trying to stabilize as best it can. The real question is wheat. Can it hold in this area?
Okay. And we're just going to have to wait and see if we can get a pop.
We have to get some kind of demand going in the wheat market. And right now it just doesn't exist.
All right. Well, now I want to talk to you about Rodney in Edgar, Wisconsin's question. Last week, I believe it was last Monday, was the report of a cow in Canada with BSE, or commonly known as mad cow disease. His question is, what impact will the BSE case from Canada have on U.S. beef?
12 years ago, if this was 12 years ago, we'd see limit down markets just like we did back in 2003.
Even in the U.S. beef market.
Right. But it's not that time. We've seen these cases. We've seen the precautions that are out there. We've seen that there's very little ripple effect throughout the industry. We haven't heard of any, other problems. And so, I don't know that we're going to see a huge sell-off tied to this piece of news just because the world's gotten used to it. We've grown numb to it. We grew numb to $4 gasoline, but we do that. And so now the market needs something else, something more exciting to really start trading again.
And I think that's been kind of evidence. We've had a week of trading, almost 2 weeks of trading, without any serious nods to the BSE case.
Were we lower this week? Yeah, but if that was an issue, you would think that the U.S. market would actually have gone up, and we didn't. The cash market didn't do much of anything. So again, I just think it's an issue that comes up, makes a good headline, but it really doesn't move the market that much anymore.
All right. Now, finally, we've got Richard in Belle Eagle, Tennessee, is curious. Commodity we didn't get a chance to discuss on the show. He's curious, what are your latest thoughts on the former Southern King, cotton?
Cotton market has actually shown some life here of late, and it's coming from the right side of the market. In other words, the commercial side. We're seeing the future spreads. When we talk, I talk a lot about, I mention future spreads a lot. To me, it's the key to supply and demand.
Now, Darin, before we go on, we get a lot of viewers that are watching us in high school or at entry-level commodity classes. Could you talk briefly about the spreads?
Absolutely. It's the price difference between contracts. And if you have the nearby contract gaining on the deferred or pulling away from the deferred contract, which is the one that follows it, then you've got a lot of commercial buying, which means that the cash market, the supply and demand situation is growing more bullish, or they think that the price needs to go up to source supplies to meet demand. If you have the reverse of that happening, where the deferred side of the market is gaining on the nearby and it's pulling away, so they're saying they don't need your cash supply of whatever it is, corn, beef, wheat, whatever it might be. So that's a bearish situation. The larger the spread towards the deferred, the more bearish. The less, the more bullish. And that's the argument we've always had with soybeans. But in this case, we're seeing a lot of buying coming into the nearby contracts in corn, both old crop and new crop. Maybe it's not this huge upswing in demand, but there is this growing concern that supply and demand situation's tightening. And that's providing support. The market's been beat up for quite some time. So I think cotton's a market that can actually be on the upswing in here. And I think it can start to work higher regardless of what's going on the rest of the ag sector.
Now, do you think this stronger cotton market is going to help it buy some acres away from soybeans?
No.
Okay.
I don't. It's still not that big of a player. I mean, it lost its ground again. Basically, when we had this demand market in corn and the never-ending battle between corn and soybean acres. So it lost its ground, and so much of the attention now is focused on China and India, with the U.S. cotton market a distant third.
Okay.
So, will it steal many acres? No, I don't think it's going to be enough to really move things.
All right. Well, Darin, thank you so much for taking the time to join us this weekend.
Well, thank you, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so. Tell your friends and family to watch us on the internet, and we hope you have a tremendous week. Thanks.